Right now, a silent financial shift is unfolding behind closed doors. Governments are accelerating their central bank digital currency developments. Global alliances like BRICS are openly declaring their intentions to dethrone the US dollar. Institutional liquidity giants are repositioning, and Ripple, the company tied to XRP, is suddenly launching institutional-grade platforms like Ripple Prime, which are specifically built for one purpose: onboarding massive players into digital assets, with XRP sitting as the primary liquidity solution. And while many retail investors remain distracted by short-term price movements, the infrastructure for a unified global bridge currency system is being quietly assembled, piece by piece, and the deeper you look, the clearer the pattern becomes. XRP is being positioned, not as a speculative altcoin, but as the connective tissue between fractured financial systems, between CBDCs, between sovereign currencies, between East and West, between legacy finance and decentralized liquidity, and that is why major banks, global regulators, and cross-border settlement institutions are testing Ripple's technology under non-disclosure agreements, because the public is not meant to realize the scale of this transformation until it is already complete, until the switch is flipped, and only those who are paying attention will have positioned themselves correctly before the global rails are reset. Ripple has openly emphasized that XRP is uniquely designed for real-time cross-border settlement, while CBDCs are designed for domestic financial control, meaning central banks are not looking for CBDCs to communicate with each other. They need a neutral, interoperable, real-time settlement asset, and multiple central bank reports, including those connected to the BIS and IMF, have acknowledged the necessity of a bridge asset that is independent, scalable, and instant, exactly matching XRP's design. And while critics laugh, institutional accumulation continues, because institutional money never chases narratives. It follows liquidity, regulatory clarity, and infrastructure, all of which are aligning around XRP in real time. Consider BRICS, the growing economic alliance that already includes Brazil, Russia, India, China, South Africa, and now multiple new members, openly discussing a global payment system to bypass the SWIFT dominance. And while their public discussions focus on creating a unified digital settlement layer, their private testing has reportedly involved Ripple's technology due to its ability to facilitate real-time international settlements without relying on the dollar. Meaning XRP could be the neutral bridge asset that connects nations that do not trust each other's currencies, which aligns perfectly with Ripple's goal of powering a digital liquidity layer beneath the geopolitical surface. At the same time, Ripple is securing licenses in key financial hubs, positioning itself to operate legally as a liquidity solutions provider globally, gaining full approval in Singapore, advancing regulatory talks in the UK, expanding in the Middle East, and progressing through the US legal battlefield, where the SEC is slowly losing its ability to suppress XRP. And once final clarity is granted, whether through settlement or judicial mandate, XRP's regulatory uncertainty vanishes, opening the door for institutional money to legally flow into it, including through ETFs, which are already being whispered about by analysts and insiders who believe XRP will follow Bitcoin and Ethereum into institutional investment vehicles once clarity locks in place. As this plays out, on-chain data is showing quiet whale accumulation, with large wallets consistently absorbing selling pressure and loading XRP in preparation for what many believe to be a liquidity-driven breakout event, where XRP's role as a utility asset becomes realized, rather than merely speculated upon, and Ripple Prime emerges as a key piece of this puzzle. A newly announced institutional trading arm explicitly designed to facilitate asset execution and liquidity management for major financial players, which signals one thing: big money is preparing to enter digital asset markets, but they require professional-grade rails to do it, and Ripple is positioning itself as the gatekeeper of this transition. Meanwhile, ETF momentum is building globally, with multiple jurisdictions considering the approval of digital asset funds tied to real-time utility tokens, and XRP, with its utility-first position, becomes an obvious candidate once its regulatory status is final. And when ETFs open the floodgates for Wall Street to legally hold XRP as part of diversified liquidity portfolios, demand could surge dramatically, particularly as institutions begin using XRP not only as an investment vehicle, but as a settlement mechanism. And this dual demand, speculative plus utility, creates a supply shock that could push XRP far beyond previous highs, especially considering locked supply, slow release schedules, and burn transaction fees gradually reducing total circulation over time. In this moment, the average retail investor is unsure, afraid, skeptical, distracted by minor price fluctuations, unaware that they are standing at the edge of a financial reset, unaware that the decisions being made today by banks, governments, and leading financial institutions are paving the way for a digital economy powered by interoperable assets, unaware that the infrastructure being built is not theoretical, but already being tested in real-time cross-border corridors, unaware that XRP is not a meme, but a potential global financial backbone, meaning when clarity hits, when ETFs launch, when CBDC networks demand a bridge, when BRICS unveils their settlement system, when Ripple Prime begins onboarding massive liquidity clients, the question will not be if XRP moves, but whether you were in position before it did, and now, the evidence is piling up faster than ever, pointing to a coordinated transformation in which XRP is uniquely suited to act as the silent engine powering the next evolution of global finance, creating the possibility of one of the most significant digital asset revaluations in crypto history. As institutions prepare, retail sentiment remains divided. Some believe XRP has been stagnant for too long. Others argue that if it were going to move, it would have already, but this mindset fails to recognize how institutional adoption cycles work, how regulatory clarity must precede mass participation, how utility assets gain value through infrastructure, not hype, and how financial systems do not pivot until the architecture is complete, meaning we are currently in the final accumulation phase before activation. The quiet stage before liquidity inflows begin, the moment in financial history where only the observant act while the crowd hesitates. Ripple continues striking strategic partnerships, entering government-backed pilot programs, aligning with digital asset regulatory frameworks, shaping the future of tokenized finance, where assets like tokenized real estate, tokenized bonds, tokenized commodities, and tokenized securities require a neutral bridge asset to transfer value across blockchains, regions, and regulatory zones, and XRP was built with this exact function in mind. Meaning as tokenization explodes, XRP's demand as the settlement layer may rise exponentially, particularly if major asset custodians like BlackRock, Fidelity, and State Street adopt compatible liquidity rails, and Ripple is already working to integrate with enterprise-grade custody providers, signaling institutional readiness. Furthermore, XRP's efficiency, rapid settlement time, and extremely low transaction costs make it a prime candidate for high-frequency institutional usage, unlike slower, more expensive alternatives that cannot scale to meet global payment demands. And as more corridors go live, XRP will not simply represent speculative hope, but measurable utility, driving organic demand. Particularly as liquidity pools deepen and arbitrage opportunities emerge across institutional trading desks using Ripple Prime and similar infrastructures, and once institutional arbitrage begins, price suppression becomes increasingly difficult, liquidity pressure builds, and momentum feeds on itself, eventually converting skepticism into fear of missing out on one of the most important digital asset adoption events of this generation. Meanwhile, BRICS, with growing interest from Saudi Arabia, the UAE, and other energy powers, is openly moving toward alternative trade settlements that avoid dependence on the US dollar, causing fears of de-dollarization and prompting Western financial institutions to accelerate their digital transitions, which may indirectly support XRP's positioning as a neutral crossbridge, especially if Ripple gains favor as a compliant, regulated, enterprise-grade solution embraced by Western and Middle Eastern financial networks, merging global liquidity streams through a single utility network, potentially using XRP as the standardized settlement token connecting East and West in a new multipolar financial system. Simultaneously, discussions about XRP ETFs are gaining traction within analyst circles, especially after the approval of Bitcoin and Ethereum ETFs created a precedent for institutional crypto vehicles. And once XRP receives full regulatory clarity in the United States, especially once legal classification is confirmed as a non-security for secondary trading, major ETF